What is up everybody, my name is Gifford and welcome back to another stock market video, and today I'm going to be talking about 6 stocks that I'm looking to buy in December. I have more than 6 stocks in my watch list, but particularly the first 3 I want to have a look at because they're quite large companies that already have a lot of growth built into them, but they're very solid fundamental companies, so if there's any drops in them, I want to buy them for the long term. And also putting a lot of my capital into Tattooed Chef isn't really a good play at the moment when there's a lot of high volatility. It's very good upside for reward, but the risk is also quite high, so I want to start mixing in these larger cap companies just because for a bit of stability within my options portfolio. The first company I want to talk about is NVDA, ticker symbol NVDA. Currently NVIDIA is at $337 and it's up about 70% during the last 6 months, so it's been on a tear. It has a market cap of $750 billion with a PE ratio of 92. So this article reading Nvidia stock a buy, chip giant hits all-time highs after Q3 earnings beat, metaverse frenzy. And that is because according to this article, in the third quarter, Nvidia earnings jumped 61% while sales surged 50%. Gaming chip revenue soared 42%. Data center chip sales jumped 55%. Nvidia purchased Mellanox last year. In addition, Nvidia guided revenue higher for the current Q4. I still firmly believe that EV play is going to make a lot of money, so I'm looking for semiconductor plays that are going to supply parts to all these EV cars that are going to be produced in the future. And over at Yahoo Finance, we can see Nvidia has been beating its EPS estimates every quarter. In the revenue department, we can also see it increasing every year. And having a look at the analyst recommendations, we can see that here in December, out of 38 analysts, we have 7 as a strong buy, 14 as a buy, hold 18, and a couple of underperform and sell, but to me, Nvidia as it gets lower will be a buy. The next stock that I'm looking at buying is Advanced Micro Devices, ticker symbol AMD. So AMD operates a semiconductor company worldwide. And here in the rewards, earnings are forecasted to grow 17% per year, and earnings grew by 353% over the past year, and that is why the share price has been absolutely cranking. Having a look at last year, we can see that AMD has been slowly climbing up with a big jump up here and now a little bit of a sell-off in the current market. With regards to simply Wall Street's valuation, they don't think very highly of it, as they say it's got a valuation of 42 times the PE ratio. And here, its current price of $139, they think it's overvalued by 61% and only giving it a fair value of 86. So I'm not sure if I agree with that because stocks can be mispriced all the time and it really depends on the people buying it whether or not it's worth it or not. So this is just really an indication. So moving on to future growth, we can see here that it's going to have about 15.8% as they predicted, and its current revenue at the moment is at $14.8 billion, and in the next couple of years that's going to be at about $21.7 billion. So really I compare that to its market cap of $167 billion right now. Do I really want to pay for that stock? The stock is quite high, so I would like to see it a little bit lower if I was to buy it. One of the biggest things about AMD is its CEO, Lisa Xu, who's really turned around the company. So reading here at 2020, she's the Fortune Business Person of the Year, ranked number 2. The third stock I'm looking to buy is in the same sector, and that is called ON Semiconductor, ticker symbol ON. Reading the rewards, trading at 24.6% below its estimated value, earnings are forecasted to grow by 17.5%, and earnings grew by 235 during the last year. So unlike the other 2 companies, onsemi has had a bit of a slower growth. As we can see, the 52-week low was 29 and the 52-week high was $65, and it's roughly at $61 right now. We can also see that onsemi's market cap is much lower than the other 2. So this market cap here is at $26 billion, where AMD is about $170 billion, and Nvidia is a massive $750 billion, much larger than onsemi. One of the things that attracted me to onsemi is it has lower multiples, and this one specifically I'm talking about is NTM, which is next 12 months, total enterprise value, which is the value of the company really, divided by its revenue, and you can see here that its metrics are pretty low into the 3s, 4s. Where if we compare that to say like a Nvidia, which is up in the 20s over here, and then even if we go over to AMD, which is 6 and 7, onsemi is much lower. So the metric of good enterprise value divided by revenue, they're saying that you really want one between 1 and 3, and onsemi is about there at 4, where Nvidia and AMD are really high. So I think I can get more value out of onsemi as a semiconductor play. So reading, generally EV versus sales ratios range between 1 and 3. Anything at or below 1 will be considered low ratio. Anything at or above 3 is considered quite high. So if the share price of onsemi becomes a little bit lower, that means that the ratio is going to get lower, maybe into the 3 or 2 range. Then I'd definitely be looking to buy the company. The fourth stock I'm looking to buy is him and hers, ticker symbol HIMS, and we can see here I got 33.2 shares and I'm currently down by 19%. So him and hers just reported their third quarter 2021 financials, and it reads here, Q3 2021 revenue grew by 79% year on year to $74 million. Q3 2021 ending membership subscriptions grew by 95 year on year up to 551,000 members. They exceeded their Q3 2021 revenue guidance, and they've also raised their full year 2021 guidance, meaning they're making way more money this year. And as we look at him and hers, the last 6 months it's just been going down massively, and I started buying at about $8 or $9 and it's just kept on dropping even though there's good news in the company. We can see that the market cap is now only $1.18 billion, and its 52-week high was $25.40, and its 52-week low is just a recent $5.52. So I'm gonna have to start buying into this company right now. So the fifth company I'm looking to buy is SFIX, ticker symbol SFIX, and it too has had a recent decline. Its 52-week high was $113, its 52-week low is $22, and it's now only a $2.6 billion company. And if you were to buy this at its all-time high, you would lose 77% of your money. So over at Simply Wall Street, they think it's trading at 87.6% its current value, and earnings are forecasted to grow 42% per year. So the current price right now is $23.80, and they think its fair value should be $193. Quite a difference. I just want to highlight that you can see that its revenue is $2 billion and the company is about $2.6 billion. You would think that a lot of people would be buying into this company, but one of the things that they don't like buying into it is because they don't actually have a lot of earnings. You can see that the revenue could be quite high at $2 billion, but the earnings are just negative $8 million, which is not very much. And if we go out here to 2024 July, you can see that its revenue will increase up to $3 billion and its earnings is only going to go up to $67 million, which means that the operating cost is probably pretty high, and by the time they pay everything else, there's not a lot of profit on top, which may be why a reason that not a lot of people are buying SFIX after the hype has gone out of the market, where people were overpaying for the stock and realized, hey, it's not actually generating a lot of earnings back to its shareholders or the company. So looking at its earnings and revenue history, we can see a lot of the patterns here where the profit margins are pretty low. So even though the revenue goes up, there's not a lot of money left over. They're pretty slim margins. However, one of the things I noticed is that SFIX has a massive institution and hedge fund ownership. So this is what keeps the stock from going absolutely bankrupt. Now there's a lot of institutions here. Now if they do decide that they do want to sell the stock, then it's going to hurt it quite a lot because they will pull out a lot of their money, but this just means it has a solid backing. So I don't see this stock dropping down any lower already in its current market. It might still drop a little bit, but who knows. I think this is a good opportunity to buy this at a lower rate. Just for myself, it's not a business I really know or kind of understand, so I'm not going to be putting a lot of money into this, but I think this is just an easy one to pick up while it's low and then sort of dropping it off later on when it starts gaining some momentum and take some profits. The sixth stock I'm looking to buy as it drops down lower is obviously Tattooed Chef, ticker symbol TTCF. So having a look at its 6-month performance, we can see that in here, if you were to buy it, it's dropped by 31%, and then straight after that, within a month, it goes up to 50%, and then after hitting that high, it then goes down by about 36%, and we can see that its all-time high was at $27.8, its low was at $14.80, and it's only now got a market cap of $1.24 billion. I've got a dedicated video in the future for Tattooed Chef, so look out for that. So those are my 6 stocks that I'm looking to buy in my Sharesies portfolio in the month of December. Let me know if there's any undervalued stocks that you're looking at buying into. Thank you for watching, and the trading platform I use is Interactive Brokers, Hatch Invest, and Sharesies, and I use Investnow for my index funds. If you want to start your own investing journey, feel free to have a look at my referral links down below if you're from New Zealand. As always, safe investing, and just remember, I'm not a financial advisor. I'm also just a retail investor sharing my journey here on YouTube. And you don't want to be following me because I also make mistakes, and at the moment it's not going well for me. So you want to make sure that you buy stocks that you believe in and just don't blindly follow someone because they could lose you your money. That is all for now. May the gains be with you, and I'll see you on the next one. Goodbye.